Did you know that you probably pay a higher tax rate than Jeff Bezos, Elon Musk, and Warren Buffett combined? Last year, you gave up somewhere between 15 and 35% of your paycheck in taxes. The 25 richest people in America paid a true tax rate of about 3.4%. Warren Buffett, one of the richest men alive, came out to around 1/10 of 1%. And in some years, men like Jeff Bezos and Elon Musk paid nothing in federal income tax at all. Zero. And here is the part that should bother you the most. They did not cheat. They did not hide the money in some secret island account. They did it all completely, perfectly, legally. Because the ultra-wealthy do not play the same game you do. They play a different one. It has 3 simple rules, and it even has a name. Buy, borrow, die. Today, how the richest people on Earth built a machine that lets them spend billions and never really pay tax on almost any of it. And quick favor before we start. If you want to keep learning how money and power really work, hit like and subscribe. It costs you nothing, and it helps us more than you think. Now let's break it down. The strategy is not some ancient secret. A law professor named Edward McCaffrey gave it its name back in the 1990s. But the idea behind it is older than that. It goes all the way back to the oldest lesson in the history of money. There is a difference between the money you earn and the money you own. And our entire tax system is built to punish one and quietly protect the other. Rule 1. Buy. Think about how you make money. You work, you get a wage, and the government takes its cut before the money even hits your account. Wages are taxed hard, and they are taxed immediately. But the rich do not live on wages. They live on assets, stock, companies, real estate. And here is the magic word that changes everything. Realized. In America, an asset is only taxed when you sell it, when you lock in the profit. The tax code calls that realizing a gain. So if you own $100 billion in stock and that stock doubles, how much tax do you owe on that gain? Nothing. Not a cent. As long as you never sell, that growth is invisible to the taxman. On paper, you might be the richest person in the world. On your tax return, you barely made a thing. That is how a founder can watch his fortune grow by tens of billions in a single year and legally owe almost nothing. He never sold. He just bought and held and waited. But this creates an obvious problem. You cannot buy a house or a yacht or a private jet with stock you refuse to sell. You need actual cash, and selling the stock would finally trigger that tax you have been avoiding. So how does a billionaire spend money without ever selling anything? That brings us to rule 2. Borrow. Here is the move that most people never see. Instead of selling his stock, the billionaire walks into a bank, and he uses that stock as collateral. The bank happily lends him cash against it. It is called a securities-backed line of credit, and for the very rich, the terms are incredible. Borrow against your shares at an interest rate far lower than the tax you would have paid by selling. And now for the most important detail in this entire story. A loan is not income. When the bank hands you $100 million in borrowed money, the government does not count that as earnings. Why would it? You have to pay it back. So it is not taxed. At all. Let that sink in. He now has $100 million in cash to spend on anything he wants, and on paper, he has earned almost nothing. This is not a loophole hidden in the shadows. Elon Musk has pledged tens of millions of his own shares to banks as collateral for personal loans. The ultra-wealthy get to unlock their fortune, spend it freely, and never officially cash out. They live like kings, on money the tax system treats as if it does not exist. But you might be thinking, surely this cannot last forever. Eventually that loan comes due, and he is still sitting on a mountain of stock with a giant untaxed gain buried inside it. If he ever sells to pay off the debt, the tax finally lands. Sooner or later, the bill has to come, right? By the way, if this is already blowing your mind, tap the like button right now, because this last rule is the one they really do not want you to know. That is where the third rule comes in, the darkest and the most brilliant of them all. Die. When a person dies and passes assets to their heirs, something strange happens in the tax code. It is called the stepped-up basis. Normally, tax on an asset is calculated from what you originally paid for it. Buy a stock at $1, sell it at $100, and you owe tax on the $99 of gain. But at death, that original price is erased. The cost basis steps up to whatever the asset is worth on the day you die. So a lifetime of gains, decades of growth, billions of dollars that were never taxed, all of it, wiped clean in an instant. The heirs inherit the stock at its new value. They can sell it, pay off dear old dad's loans, and owe almost nothing, because on paper there is no gain left to tax. The debt does not just get deferred, it gets deleted. The tax that was owed for an entire lifetime simply vanishes at the finish line. By one estimate, this single rule, the stepped-up basis, costs the United States government over $70 billion every single year. Money it is owed on paper and will never, ever collect. Now, to be fair, there is a real debate here. Some economists point out that most billionaires actually borrow far less than you would think. The truly unstoppable part of the machine is not the borrowing. It is the dying. It is that final step where the gains disappear for good. But whether they lean on Rule 2 or Rule 3, the principle underneath it never changes. This is a system where selling is taxed, but dying is not. Where the paycheck is punished and the fortune is protected. So let's lay the whole machine bare. Rule 1. Own, do not earn, so your wealth grows where the taxman cannot see it. Rule 2. Borrow, do not sell, so you can spend that wealth without ever triggering a bill. Rule 3. Die, do not pay, and let death erase the tax entirely, handing the fortune to the next generation clean. Buy, borrow, die. And the strangest part of all, none of this is secret. The professor who named it did so 30 years ago. Politicians talk about closing it every single election. Just this year, a sitting governor called it a tax-free lifestyle for the richest Americans and demanded that Congress shut it down. And yet, year after year, the machine keeps running. Because the people who benefit from the rules are the same people who have the most power to keep them. So here is the real question underneath all of it. We are told that the tax system treats everyone the same. But the richest people alive figured out how to live enormous, lavish lives, while officially earning almost nothing at all. So it is not really a question of how much billionaires make. The question that has always mattered in the history of money is this: why does a system built by the powerful still tax the person who earns a living far harder than the person who simply owns everything?